Good morning, traders. It's after 8 a.m. Chicago time, 9 a.m. Eastern on Thursday, the 27th of July, 2017. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. As usual, we follow a daily routine. Um, things seem repetitive, but that's exactly how we need them to be. This morning, gold is the leader. Gold is up, has popped up $13, up 1.05%, followed by the Nasdaq after some pretty decent earnings. The S&P 500 and then the Bund follow that. The laggard today is the DAX and the U.S. Treasury bond. Crude oil is down 21 cents at 48.54. Crude has tested and retested above yesterday's high and has pulled back down and is holding steady right in the middle of the prior day's range. So that's how things are standing right now. It looks like, other than the Nasdaq, it looks like a pretty mixed bag in there. Just up, 15 basis points or so. Not too much going on overnight. As far as what the news flow is, tons and tons and tons of earnings. This morning we got Samsung coming out, beating its estimates and revenues. We also have had one of the miners, Barrick Gold. Facebook came out at $1.32 versus $1.14 with 9.32 billion in revenue versus 9.17. So that beat, and so on. Gilead and many, many others. I won't go through each one of them. Also, Europe is going through its earnings season, and there's just a lot of good news out there. So the market's trading a little bit higher today than where it closed, as we would all expect. As far as news flow overnight, initial jobless claims came in at 244, slightly worse than 240 expected. Continuing claims 1.96 in line. We had three other numbers at 8:30 this morning, 8:30 Eastern this morning. The June prelim durable goods orders just had a blowout figure at 6.5%, 6.5% versus 3.7%, giving us a little pop. And durable X transports 0.2 versus 0.4. U.S. June advanced goods trade balance came in better at negative, a deficit of 63.9 billion versus an expected deficit of 65.5. That comes right from the census. And also at 8:30, we got June preliminary wholesale inventories, also a strong number. Actually, a worse number. Inventories are up 0.6% versus 0.3%. Okay, so that's where things stand as of right now. There's still a lot to, the market seems to be paying more attention to the earnings as it should. I prefer it that way instead of this drama in Washington that we're all having to sit through. Um, so there's not much to report in terms of the geopolitics. I'm not seeing anything outstanding. Um, but overall, it's still strong. We're still seeing some good numbers, and the market's responding accordingly. One second. My internet's slow for some reason. So that's that. As far as what we expected yesterday versus what we got, here's what we expected yesterday. Yesterday was looking for responsive selling after an open auction out of range. So was looking for the market to start moving down. Remember, responsive means we're moving um, towards the latest auction or the most recent auction. So expected it to come down, but I did expect it to pop sometime in the morning once it tests down into the second distribution down, which was at 75. and then for it to the FOMC to push us higher, as the FOMC is not likely to do anything but what it's already doing, which is to hold steady. So that's how things were expected. This did not work out I'll show you in a minute. The secondary hypothesis open auction tests a little bit higher and then starts selling into um, the 71.75 and then bounce back up towards the mid with a continuation to about 24.70 and to hold steady at the low into the close. This actually is pretty much what worked out. I'll show you that. In fact, here it is. We ended up selling off a little bit on the open, so it wasn't an open auction out of range. We did have an open auction in range. The market just sat sideways for a long time. Then we had range extension down. Again, more sideways chop, but we ended up getting down into the 71.75, pushed it by a tick back to the mid, and then the auction was interrupted. We never made it down into this 70 area. Instead, but what we did do is we pushed into the mid, the exact mid of the gap. So you see the mid of the gap, this gray number right here, this gray number, 71.50, is exactly the low yesterday. We tested the gap mid, and then we started to move higher in the overnight. We could not test lower into the overnight trade. Some good numbers out of Facebook and so on. So this is the overnight, immediately starts pushing higher and then choppy through most of the Asian session, and then Europe again buying immediately. Europe's been buying on the open immediately, pretty much every day for the last week, and then sideways from there. Completely Gaussian profile with a little distribution down below. This is more of a P-shaped profile. Volume is pretty good at 154,000 versus 140,000. So all looks good here. We've arrived at the next measured move target, which is a double, and we are holding steady in this area and not pushing through just yet. But overall, the market has pushed up, formed a peak, and now it's doing the pullback for a further likely push higher. The overnight inventory, yet again, is on the buy side. That's the overnight inventory. On the buy side, the difference between yesterday's close and the current price is to buyers, so the overnight inventory is bought. And then the delta, also overnight inventory, is slightly bought. So we expect it to rebalance on the open a little bit by selling off as the market opens. Big picture, this is the daily profile, daily composite chart. This is where we've been pretty much since April, just sideways in this big zone from 49 quarter to 61, 24, 61, 25. We broke out of it last week, and we've held steady with these gaps. We gap and go, gap and go. The point of control underneath us is 69. The current point of control is 74, 75, or 75 even. And what we've been doing is just buying and gapping up and holding steady, gapping up and holding steady, gapping up and holding steady. We're in a pretty strong uptrend. I'm sure for those who are short, they're feeling it. But overall, the market has no reason, in my opinion, right now to motivate sellers to drop their positions. They keep getting paid week after week, pretty much every week for the last few weeks. We've made a new high. So there's really no incentive for investors or traders to sell off their long positions just yet, despite all the noise about how the world's coming to an end. As far as what we're expecting today, just to conclude, I do have a couple of words for you since it is the summer and there isn't very much going on. This is a good time to tune your approach and your trading. This morning, expecting again an open auction out of range. I expect it to try higher and then become responsive, looking for a test of 76 quarter, looking then for a test of 75 for a bounce. I'm looking for a profile that's mostly Gaussian. Again, yesterday's profile is completely Gaussian. It's very balanced. The value area is very valid. Overall, just not the market's pretty much in balance. We have a 2-day balance here. There's a bit of energy that's built up over the last couple of days. Volume, as you can see by the tails here, actual volume versus 20-day, the 20-day average volume. Volume's been pretty okay. It's a little light, maybe 10% at the most. Yesterday a little more, 10 to 15% probably. But overall, the market's pretty steady. I mean, this is just a bull run that's been going on for a long time now, for 8 years, and it continues. So the primary hypothesis is to test higher and then become responsive. So I'm looking for the bigger moves, just like yesterday, to be to the downside, to test through the whole value area of yesterday. The value area of yesterday, there it is, 74 and a quarter to 76.75. 74 and a quarter, 76.75. So that's the bottom side. I'm looking for that 74 area to be tested today by Hypo 1. Hypo 2, if we start to move early down, I'm looking for a push down into the 76, a complete stall, an attempt lower, and then for the market to start pushing higher, and then to finish a little bit higher. We migrated the point of control lower yesterday versus the day before. We had a lower high and an inside day. But overall, I see some weakness here on the buy side, short-term intraday. I see weakness on the buy side, but Hypo 2 is looking for a test of new all-time highs, and then for it to stall out as soon as that's done. We're against 24.80. I'm still expecting some movement towards some of these measured move targets here at 24.80, 450. I don't see a reason yet why the market is not likely to make that. But if it does push into that, I expect it to finish lower in either case. So Hypo 2 is looking for a push down early and then an impulse up, and then the money is made on the follow up move to new highs. Okay. So those are the ideas, the key ideas for the day. Again, it's repetitive, it's boring. We're saying the same thing every day. This is the market cycle we're in. It is not a great cycle. It's not exciting. Our job isn't, we're not on the edge of our seat every day while trading, as I commented yesterday. But this is a good time for you to hone in on what you're doing, to take your time, to update your studies, and so on. It is the summer after all. Make sure you're out there, you're outside. It's the summer, at least in the northern hemisphere. Make sure you're outside. Make sure you're taking the time to take care of your body and mind. This is the time of year for that. Don't forget, you are a complete system, not just a trader, not just a father, mother, and so on. You're a complete person. Make sure you're hitting on all areas. The last thing I want to say, again, not to preach, but the last thing I want to say is this is worth it. For me, this is worth it. Even when it's grinding, even when it's boring, we need to be here and we need to be on top of the markets, because when the moves happen, we're not able to take advantage of them if we've been away for a long time and are not in tune with how the market's been moving. I don't know when these moves are going to happen, but you kind of have to sit through the boring stuff, the grindy stuff, to recognize that something has changed and to take advantage of it when it does. I want to remind you also that it is better to try and fail. It is better to try and fail than to let your mind excuse you out of doing anything that you feel you want to do. So this is why we're here. This is why this is important, whether it's trading or starting a business or trying a new sport or working out or whatever. It's better to try and fail, but none of that matters If you throw caution to the wind and you do not, and you did not, uh, you did not prepare yourself for the loss. So don't doesn't mean you should just swing for the fences and take all kinds of crazy risk. I'm going to bet $500 per contract on this trade and just put up all the money I have in margin for this one trade. I'm not saying that. It is better to just define your risk, try and lose and fail. You're much, much further along than someone who sits there and nibbles with one or two ticks and then just gets cut and pinpricked to death. Okay? So create a plan. This is the time. Create a plan, follow it, and if it fails, it fails. You did what you had to do. This is why we're here. If life was comfortable and everything worked out perfectly, we wouldn't be on this earth, is what what I believe. We're here to experience ourselves through adversity, conflict, and some suffering. Good luck, and I'll catch you tomorrow. Take care. Oh, and by the way, it wasn't an inside day. I missed the push down on the FOMC. Anyway, take care.